In today's video, we're going to take a close look at the top cryptocurrencies bear flag analysis and further market trajectory speculation. Recent trading activity in Bitcoin has created a pattern known as a bear flag. What does it mean exactly? Well, it appears to be a break in the market's downward trend after some brutal recent months, and it typically signals a new change on the horizon for assets. First off, a cause for concern with the potential for some serious consequences moving forward. What's particularly concerning at the moment is how lopsided the positioning has grown in the market for cryptocurrency options. The particular dynamic may make any sell-off brought on by a flag breakdown worse. On a price chart, the bear flag appears to be somewhat of an upside-down flag. After a significant downward movement, the flagpole, there occurs a small price reversal, the flag. According to the wisdom of experienced technical analysts who possess the key skill of interpreting price charts, an asset's price often decreases after the flag breakdown by about the same amount as the length of the pole. That's pretty technical to wrap our heads around, but then again, so is the decentralized finance space itself, so this level of depth is to be expected. Consequently, the bear flag is viewed as a continuation pattern that is bearish. Secondly, the best way to understand the market is to take a deeper look. In the case of Bitcoin, BTC, the prior slide from $32,500 serves as the flagpole, and the corrective rebound from the low of $17,601 on June 18th to the high of $22,400 seen as recently as Friday serves as the flag. The flag is shown by trend lines that connect the lows of June 18th and July 3rd and the highs of June 26th and July 8th. Griffin Ardern, who's an experienced volatility trader at the crypto asset management company Blowfin, stated that the next collapse might occur fairly soon. But how did he make this deduction? Well, according to him, the clear signal was the bear flag itself. A breakdown would indicate that the broader downtrend is starting up again and allow for a retest of the most recent bottom of $17,601. This is likely if the price closes the trading day below the lower end of the flag. Below that, significant resistance is found at the psychological threshold of $15,000 and the peak of $13,880 back in June 2019. But all this technical analysis is inherently arbitrary. Price patterns frequently fail, putting traders who only focus on the charts on the wrong side of the market. It's good to be aware that other price chart patterns are giving contradictory signals, while the flag pattern on the daily chart is indicating a risk to the downside as well. As was previously said, technical examination of the long-term moving average and a number of blockchain data indicators indicate that the Bitcoin market is either about to bottom or has already started to rise. Coming up next, further market speculation data in today's economy. Trading in the options market might in fact increase volatility. However, if the flag ends in a move to the downside, the subsequent fall could be made worse by participants in the options market, namely market makers, who have a duty to preserve a high level of liquidity on an exchange. Market makers continuously purchase and sell the underlying asset as the price fluctuates in order to maintain a neutral portfolio while constantly being on the other side of investors' trades. Ardern claims that market makers presently have short put positions, which effectively indicates that they're betting against options traders who are expecting further price decreases. As a result, they stand to lose a sizable amount of money if Bitcoin's downtrend continues. If the market was to actually decline, it may cause the market makers to rush to close out their losing positions, which would only further exacerbate the downward price movement. Investors in derivatives will further exacerbate the decline if and when the price somehow falls in the future, warned Ardern. Investors were awaiting Wednesday's U.S. inflation data, which is likely to strengthen the case for the Federal Reserve's continued faster withdrawal of liquidity. Bitcoin was last seen trading over 1% down on the day, near $19,700. We didn't even know this kind of day was possible. The Singapore-based options trading behemoth, known simply as QCP Capital, stated in a market forecast tweet sent out early on Tuesday that the inflation print has been a key driver of market action this year, and that we can expect an uptick in this level of continued volatility. Guess we'll just have to wait and see how things shape up in the days leading up to the event. Now time for some other news. Next up, the Bored Apes need a bailout ASAP. Celebrities buying bored monkey illustrations of all things through ridiculous seven-figure transactions have made the Bored Ape Yacht Club a significant symbol of growing valuations in the NFT industry as a whole. However, the collection of Ethereum profile pictures now demonstrates just how much NFT demand has decreased amid a broader crypto market collapse, which is being reported by the media as a crypto winter. According to NFT Price Floor, the current price for a single Bored Ape Yacht Club NFT, or the least expensive item marketed on a secondary market, is just $96,469, or 80 ETH, which is a significant drop in their original valuation in comparison. The website's data shows that the price dropped overnight to as little as $91,741, even further beyond the previous drop. If we had to quantify this major drop in valuation, information, then we can see clearly that in less than 2 months, the price of a basic Bored Ape NFT has decreased by roughly 78% in terms of dollars. It had previously reached a record high of approximately $429,000 or 152 ETH. Owners of Bored Ape had the option of claiming free plots as NFTs as a direct result of this. Since then, there's been a reduction in the collection of ETH by a whopping 47%. That's still a big number, mind you, but it also shows how much the declining value of Ethereum has affected the prices of NFT collections overall, with many NFT owners and investors taking massive hits on their initial cost/investment. Coming up next, some celeb and NFT controversy. Chinese NFT platform Lianwan has come out and publicly apologized for stirring up trouble in Hong Kong after the agency of actor Louis Koo Tin Lok claimed that the platform was exploiting Koo's photos for marketing without permission. According to a statement from Koo's agency, Master Kingdom, published on Koo's official Weibo account on June 17, 2022, Lianwan, a well-known Chinese digital collectibles platform that sells blockchain-backed images, featured pictures of posters from Koo's 2021 crime thriller G-Storm and claimed to be working with Koo. In order to prevent confusion, Lianwan was also asked by Koo's agency to stop any infringing behavior and remove any false remarks. The film's distributor, China Huace, and copyright owner Mandarin Motion Pictures jointly stated in a statement on Weibo that they had never given permission to Anhui Lianmai or Lianwan. Meanwhile, Lianwan released a statement on its Weibo account, claiming that it used Koo's poster images with permission from creative agency Anhui Lianmai. When Lianwan apologized on Weibo on June 18, 2022, it emphasized that it had always respected the legitimate rights of copyright owners and that the offending materials had been removed from its site. The NFT platform also gave the public the assurance that it will investigate the situation carefully, check any information with Koo's agency, and immediately release the findings. Lastly, investors chime in with their own take on the matter. Crypto fans can no longer refer to Bitcoin as the new reserve currency, the digital replacement for the gold standard, or even as a revolution in the concept of investing. Cryptocurrency doesn't appear to be the next great hope for humanity, but rather more like a typical boom and bust investment. Yesterday's news, basically. The crypto boom was caused, as was forewarned in a previous Forbes article, by major central banks' repeated failures to implement sound policies to prevent this from happening and regulate the market. Until they made poor choices about the money supply or neglected to combat inflation, cryptocurrencies were always going to appear to be wise investments. As soon as central banks lost their complacency, the value of cryptocurrencies began to decline. In the meantime, the prospect of crypto market regulations that might choke Bitcoin's steep buy-in, has increased skepticism about the market's future direction and whether it makes sense to buy low now or to stay out of the crypto game altogether. However, according to Bloomberg, investors still want to get involved in the cryptocurrency market. They're acting wisely. They believe that cryptocurrencies will endure notwithstanding the bubble that erupted back in January. They might not save humanity from itself, as some had hoped, but they continue to be an important speculative tool and a source of security when other assets seem way too risky or volatile. That's a wrap for this video. What's your take on the crypto bear flag? Do you feel like it's going to be falling any lower? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.